Hello and welcome to week number 49, 3 weeks to go until the year, and cracking on this week's analysis by having a look at US real yields and gold. US real yields is plotted in the blue line. I have inverted it as the correlation is quite close inverted with gold. As you can see, it's fairly priced at the moment. Depending where real yields are headed, gold will follow. So I highly recommend you for having a look at real yields and to be able to figure out what's happening in the gold market going ahead. There's no really strong indicator where this is going just now, but there will be a couple of trades along the next week and the following weeks as well, which I'll be covering very shortly. Having a look at the Scotiabank CFTC report, it's very evident that net short positions increased on the euro, so longs have decreased. Net shorts took some money off as well. That resulted in a lower open interest, but the net result is over 3 billion shorts euro. More interestingly, though, in pound we saw increase in open interest. Net short positions increased and longs increased with it. Now that's keeping over 3 billion as well. So it will be interesting to see how it pans out as we are moving forward in December, to see how much further GBUSD can fall. It's certainly a trend that is keep going. So you continuously have been seeing over 4 or 5 weeks continuous build up in bearish positions in the pound. Having a look at the last week's events and the trades we've covered, the first one we talked about was GBP USD, which pretty much tanked from the level I was looking at, and that played out well. It didn't even stop at that level where I thought it could have. It just busted right through it and started creating lower levels. I'm anticipating for this move to continue, possibly in the following weeks after the Bank of England meeting. But in very immediate term, in the short term, I believe GBUSD will be range bound, maybe even find a relief bounce. But just to really cover what last week's trade was all about. The other one we talked about was Euro USD. Was expecting the 114 handle to clip. We came 18 or 17 pips, depending on your broker, shy of hitting that level. So we were sitting around here, then we saw this surge, and then it started dropping off, and it just created this huge choppy range, which is quite difficult to trade if you are a swing trader. But more or less that panned out as well. And the last trade we had to look at was NZD-JPY, where we had specific date, when to short it, and the data we were looking at, and that created a quite massive move lower as well. Depending where you shorted at, you will be sitting over well on pips in the money on that trade. Personally, I didn't trade that one short because I had other trades going on at that time, but more or less they were the things we were looking at last week. This week going ahead, there's not a lot to chew on. On Tuesday we will have RBA meeting, which in my opinion will leave short AUD positions a little bit empty-handed. I think we might see a relief rally here in AUD USD, AUD JPY to some extent as well. The level isn't really important to me. Important comes really down to the timing. So I'll be looking at around Tuesday RBA meeting. There's also a pattern I trade with GB AUD. Every time the RBA has a meeting, there's a pattern emerging where we see a mean reversion around the London fixed level, some of which are recovering actively in the trading room. Another one I'm looking at is the Bank of Canada meeting, and I'm expecting USD CAD and CAD JPY to create some good moves as well. I'll probably focus on CAD JPY here, as it's very volatile when we trade central bank meetings. Now, I'm not expecting Bank of Canada to give out any new thing that we don't know about. So I'll be trading a pattern as well. A pattern that's consistent with most central bank meetings. If there's nothing new coming out, it's most of the times trying to fade the moves. So going into end of a day of Wednesday and towards Thursday, I'll be looking to see if this dipped further, maybe buy a dip reversion, or if it moved too much high, maybe fade those moves. I'm a little bit more bullish maybe on that side because I feel like the downside was really aggressive lately. And another one I'd like to talk about is US unemployment claims on Thursday. I'm actually looking for a bullish move on USD JPY, as I think the US yields don't have a lot further lower to go. If anything, they might have even bottomed out this side. A bit difficult to say, but 134 seems to be extremely cheap when you have a look at where inflation is nearly hitting 6% on Friday possibly. So I really feel like this is mispriced, and this whole move here was maybe just market needed to buy those bonds. On Wednesday we're going to have a 10-year auction, so expect more nonsense moves. But then going to Thursday, and specifically US claims, US jobless claims, I would like to buy in tandem with this bouncing. I would like to buy USDJPY to see how much I can get out of it. It might be a day trade. I might not carry this into for the rest of the month. And then on Friday we will have the US CPI, and that always creates a big swing trade for me. Usually on GBUSD. And again, that's one of those things I will need to cover there and then. As predicting it now, it's I will need to do all the work again on Friday. So we just wait till the data is due going into Friday. Not a lot to cover for next week, mostly reactionary trades with emphasis on Thursday for me to see if I can buy a dip in USDJPY. I'll be ending this video by inviting you to have a look on my website, speculatorsTrading.com. Going January, I'll be running a live trading event to win the FTMO challenge. We've done it this year as well. It was quite successful. Loads of traders got funded, anywhere from $10,000 to $200,000 accounts. They got funded, they got the initial money they put in back, and they had a great experience. Some traders are actually making just genuine monthly returns, and it's replacing their normal income. So it's an incredible opportunity to get into right now. And if I was a new trader, or if I was an underfunded trader, I needed help to do this, I believe this service is for you. If you know somebody who's looking to get funded but struggling to find that confidence in trading, send them my way. It is incredibly cheap to sign up right now for $25. This will be changing on the 10th of December. The prices will increase back to $50. Mind you, you're buying that now. That means the month you will be locking in the monthly rate of $25 a month, where otherwise you're paying the $50 for exactly the same thing. So try to get into it now. Familiar yourself with the service, the way the trading room runs, and then you're going to have a very successful run on the FTMO challenge as we'll be trading it in January. Again, incredible opportunity to make some life-changing money, hopefully. So that's all I wanted to cover. Wishing you a very successful week, and I'll be seeing you again next week.